Welcome to the deep dive. Today we're really getting under the hood of the market, looking beyond just the closing prices.
That's right. We're focusing purely on the mechanics, using the raw AI-generated performance data from the IntelliTraders team.
Our mission, to analyze the top 40 high-volume stocks from Wednesday, November 5th, just the numbers.
Exactly. We want to quantify things like market velocity, spot those true value deviations after the close. We'll be looking at volume ratios, true value metrics, buyer-seller direction, things that signal, unusual activity.
And the backdrop for this is pretty interesting. Wall Street finished higher. S&P up 0.5%, NASDAQ up 0.71%.
Positive headlines.
But there's still that ongoing buzz, those questions about lofty AI valuations. So digging into the specific stock data feels, well, extra important right now.
Absolutely. Context is everything.
Okay, let's start with where the action was thickest. Sheer volume. Who led the pack on Wednesday?
Well, the absolute volume leaders were pretty clear-cut. Rivian Automotive, Rivian was way out front. Almost 197 million shares traded, closing at $15.42.
Wow, nearly 200 million.
Yeah. Then you had NVIDIA, also huge at 166 million shares, price $195.21. And the short QQQ ETF, SCOQQ, saw a lot of action too, about 137 million shares.
Okay, those are the raw totals. But the volume ratio, that tells us more about unusual activity, right? How much a stock broke its own pattern.
Exactly. That's where you see the real velocity spikes. And the AI data here paints a really stark picture.
Who stood out?
Top of the list, SLDP, solid PWR INCA. It traded 586% of its previous day's volume.
Wait, 586%. Nearly 6 times its normal volume.
6 times. Just an incredible surge of interest or activity flooding into that one name.
Okay. Anyone else showing that kind of explosive ratio?
Yeah. Pinterest was also notable at 380% of its prior volume. And Rivian, our overall volume leader, also had a huge ratio, 356%.
Right.
And this makes NVIDIA's ratio really interesting. NVIDIA was only 87%.
So it traded less volume than the day before, even being number 2 in total shares.
Correct. Less volume overall compared to its previous session. It tells a different story.
So Rivian had this massive, unusual volume surge driving momentum. NVDA got its high share count from maybe more consistent big trades, but didn't have that same kind of velocity explosion compared to its own recent history.
Precisely. 2 very different volume profiles.
Okay, so how did these movers look when we apply the true value analysis? How far did prices deviate?
Right. This is where we look at the daily true value. It's a core metric from the AI, measuring how far the closing price stretched from its calculated technical fair value based on recent price behavior and volatility.
So a high overvalue percentage means the price is technically strained, maybe unsustainable.
Exactly. It suggests a parabolic move, or at least one needing immense continued buying power to hold up.
And SLDP. Our 586% volume ratio star, how did it look?
SLDP clocked in at an absolutely staggering 665% overvalue on that daily time frame.
Yes, 165%. That's hard to even process.
It really is. It suggests the price was pushed, well, over 6 times higher than its recent technical equilibrium point. Numbers like that often point to, maybe retail frenzy or very concentrated institutional action, just ignoring the technicals.
What about other big names? Were they showing similar, if maybe less extreme, overvaluation?
Well, NVDA, despite that lower volume ratio, still showed a huge 94% overvalue on the daily chart. So significant technical stretch there, too.
Okay, 94%. Still very high.
And WBD, Warner Bros. Discover, was right up there, too, 90% overvalue. The sheer buying momentum in these names can obviously overpower those technical resistance signals, at least for a time.
But you mentioned something interesting earlier about NVDA. A contradiction.
Yes, this is critical. While NVDA showed that 94% overvalue daily, indicating strain, on the shorter-term 1-hour chart post-close, it was actually 5% undervalue.
Undervalue on the hourly, but way overvalued daily.
Exactly. It suggests some late-day cooling, perhaps profit-taking, or just conflicting signals between the longer momentum view and the immediate short-term action. And that happened even with a massive volume spike in the final hour, 397% of the previous hour's volume.
That really shows why looking at multiple time frames is key. Okay, let's shift gears slightly. How did these key tech and EV names stack up structurally against their moving averages, the 200-day and 200-hour?
Right. The MAs give us a sense of longer-term technical health. Rivian, with its huge volume, looked strong here. Pre-market, it was already 18% overvalue on the 20-minute chart, confirming its gap-up start.
A position relative to MAs.
Crucially, above both the 200-day and the 200-hour moving averages. That's a technically strong posture.
Okay. And what about the buyer-seller direction signal?
For RIAN, it was a clear buyer-up trend, daily and hourly, meaning the buying pressure was fundamentally driving the price increase. Pretty clean picture.
Now, compare that to MBDA, also above both 200 MAs, which sounds good.
Technically, yes, being above both MAs is support. But the directional signal for NVDA tells a very different story.
How so?
NVDA showed seller up for both daily and hourly trends.
Seller up. So price rising, but selling pressure dominating.
Exactly. It often means larger players are distributing shares, taking profits into the rally, even as the price inches higher. It suggests institutional money might be rotating out, despite the price being technically above support levels.
That ties into the broader narrative too, doesn't it? There was that recent news about NVIDIA's CEO warning about China potentially winning the AI race.
It certainly fits. That kind of commentary wouldn't exactly boost long-term conviction, maybe encouraging some profit-taking. Seeing seller up reflects that kind of dynamic.
So seller up on a stock hitting new highs.
Yeah.
Definitely a warning flag about the quality of the move. How did Tesla TSLA look in comparison?
TSLA was also firmly above both 200 MAs. Its hourly true value was 9% overvalue, so some stretch, but the trend was confirmed buyer up on both daily and hourly. Clean momentum. And interestingly, TSLA also showed a daily squeeze indicator reading of 20.
The squeeze. Let's quickly define that. It signals building pressure, right?
Precisely. The squeeze indicator measures volatility compression. When price gets stuck in a tightening range, energy builds up, like coiling a spring. A high reading, like 20 for TSLA, signals that a potentially large explosive move up or down could be imminent.
Got it. Coiled energy. And looking at the related semiconductor ETF, SOXL.
SOXL, the 3X Bull ETF, was also above both MAs, showing 12% overvalue pre-market. So technically strong. But just like NVDA, it showed a seller-up daily direction.
So that suggests sector-wide rotation or profit-taking, not just isolated to NVDA.
Seems likely. And conversely, the inverse ETF, SESQQQ, which shorts the NASDAQ, it traded below both 200 MAs, technical weakness there despite its high volume and a gap-up start.
Okay, a lot of conflicting signals under the surface. Let's take a quick pause here. If you're finding these insights valuable, do make sure to hit that follow button and turn on notifications. That way you'll get our market analysis update delivered to you every day.
Definitely good advice.
All right, let's talk volatility itself. Who had the highest IV ranks, signaling the most expected chop? And where did we see those squeeze indicators lighting up the most?
Yeah, the highest implied volatility ranks were mostly in, let's say, more specialized volatile names. IRN, down 136% IV rank. CIFR, down 132%. SLDP, our volume star, also high at 131% down. And TSLL, upward bias, 127%. These indicate high expected future volatility.
But the squeeze, the actual pressure buildup, where was that most extreme?
The most significant squeeze readings indicating the tightest coiling were actually in some core names. AMD, Advanced Micro Devices, showed an hourly squeeze of 35.
35. That's quite high for an hourly squeeze.
It is very significant. And PFE, Pfizer, also showed a big hourly squeeze reading of 32.
That AMD reading of 35 is really interesting, especially with the recent news context. Didn't AMD stock tumble recently despite good earnings?
That's right. It dropped about 5%, and the talk was about bad timing or sour sentiment. Seeing a squeeze of 35 develop during or after that drop suggests that while the price fell, volatility got crushed. Institutions might have been quietly building positions, anticipating a snapback or a big move.
So the squeeze warns that smart money might be setting up while things look quiet or negative on the surface.
That's exactly what it's designed to flag. And we saw other signs of this internal divergence too, with contradictory directional signals in high-volume stocks.
Like what?
Well, Pinterest, for instance, daily trend was buyer up, suggesting underlying strength. But the hourly trend flipped to seller up, short-term distribution against longer-term buying.
Okay.
Look at 4D, ticker F. Daily trend was buyer down, selling pressure dominating a price drop. But the hourly trend flipped sharply to buyer up. A short-term bounce attempt against the prevailing daily trend. These flips show that money is moving fast, very localized.
And SNAP, another interesting squeeze case.
Yeah, S&P showed a daily squeeze of 3. Not huge, but notable because it started the day with a gap down, yet still had a massive 212% volume ratio for the day.
So price gap down, volume surged, but volatility compressed into a squeeze.
Right. And remember, S&P had positive news recently, beating Q3 revenue expectations on user engagement. So the squeeze might suggest accumulation was happening despite that initial negative price gap, perhaps betting on the positive fundamentals winning out.
Fascinating how these different indicators weave together. Okay, we've hit the highs, the volume leaders, the volatile names. What about the underperformers? Stocks showing strong negative true value, trading well below fair value.
TNS actually showed up here too, despite its huge volume ratio. On valuation, it was weak, 42% undervalue on the daily time frame, still 29% undervalue on the 1 hour.
So lots of activity, but price couldn't get back to its technical fair value.
Correct. TAT&T was also notably undervalued, 19% undervalue on the daily.
And any crypto ETFs lagging.
Yeah, ETHA, the iShares Ethereum Trust ETF, it was clearly lagging. 31% undervalued daily, 14% undervalued hourly. And critically, its volume was really low, only 43% of the previous day.
So low value and low interest. Double negative.
Pretty much. Suggests conviction is low there for now.
All right, final check. Key bond and index ETFs, TLT, SPY, LQD. How do they frame the day?
TLT, the long-term Treasury bond ETF, stayed weak technically. It was below the 200-hour MA, had a gap down open, but volume was high, 168% of the prior day, showing intense focus there.
Directional signals for TLT.
Mixed again, buyer down daily, but flipped to seller up hourly. More internal conflict.
And SPY, the S&P 500 ETF.
SPY looked okay technically above both MAs. Volume was average, 93%, but again, mixed direction. Seller up daily, buyer up hourly. That matches the broader theme of surface strength masking internal rotation.
What about LQD corporate bonds?
LQD was weaker, below its 200-hour MA, and volume was low, only 68% of the previous day, so less velocity or conviction in investment-grade corporate debt compared to treasuries.
Okay, let's try to synthesize this. What's the big takeaway from this AI-driven deep dive into Wednesday's action?
I think the crucial finding is the sheer level of extreme internal divergence. The rising indices hid some really chaotic, localized action underneath.
Right.
You had pockets of what looks like, frankly, technical mania SLDP hitting that wild 665% daily overvalue. But then you contrast that sharply with NVDA, which had okay daily volume, but those confusing seller up signals despite a rising price.
It suggests money isn't moving uniformly. It's chasing specific, maybe parabolic trades.
Exactly. High-speed, localized money movement, not broad market confidence lifting all boats.
And for me, what really stands out is how those raw numbers, especially the squeeze indicators, give you that granular, almost predictive insight. Seeing a 32-hourly squeeze on PFE or 35 on AMD, that's like a flashing light warning about compressed energy, regardless of the news narrative that day.
It's a potent warning signal, for sure.
And just a reminder, if you are enjoying these kinds of insights derived directly from the data, please hit that follow button and turn on notifications. It's the best way to ensure you get our market analysis update each day.
So, thinking about those extreme numbers, especially that 665% overvalue on SLDP detected by the AI, it leaves us with a key question, really for you, the listener, to consider.
Yeah.
How long can these kinds of, frankly, unsustainable technical readings persist before the broader market narrative eventually catches up, particularly when we know institutions are already questioning AI valuations and we're seeing those seller up signals flashing on key names? When does that technical strain finally break?